we start? Screen is also visible now?
Yes, sir, it is.
Yeah, thank you so much. I explained that day what is house property, how to calculate gross annual value, how to calculate net annual value, and in case of builders, how to calculate stock in trade, 2 years, those things. I think I explained interest on capital also, right? Interest on loans. Did I?
Yes, sir.
Interest on loan. During the year in which the construction is complete, excluding that one, previous years before its completion, those years interest will be accumulated or aggregated and it will be claimed as deduction over a period of 5 years. In case of let out and DLOP, deemed to be let out, there is no cap of the maximum interest to be allowed. But in case of self-occupied property, maximum you can claim deduction rupees 2 lakhs. It will be restricted to rupees 2 lakhs. Okay. Now, I think we understood when there is a vacancy allowance, vacancy rent, how to calculate the gross annual value. Right? Okay. Now, assume that during the year you have let out for 12 months. You let out for the entire year, but 2 months or 3 months rent not received. You have let out for the entire year, but 2 or 3 months rent not received. That is called as unrealized rent. Are you guys getting the concept of unrealized rent?
Sir, is it rent receivable or rent unrecoverable, sir?
Unrecoverable. Receivable, unrecoverable, both one and the same, but there is a minute difference. Receivable means still he is in the occupancy of your property. That becomes receivable. The unrecoverable means he vacates your property or you have taken the steps to vacate him the property. He should not be in any occupancy of, he should not be in the occupancy of in any of your properties.
Let's go.
In that case, you will take only whatever the rent you have received as actual rent. Whatever the rent you have received, that will be taken as actual rent. See, actual rent means rent received plus receivable minus unrealized rent. Assume you have let out for 25,000 per month. For 12 months, it will be 3 lakhs. Out of which you haven't received 2 months rent, unrealized rent. 2 months rent, the difference comes to 2 lakh 50. This is your actual rent received. Okay, this 50,000 unrealized rent. After few years later, you got the opportunity or you have received the rent. You have received this unrealized rent after 2 years, 1 year, 6 months, whatever it is. you receive the rent. In that case, whatever the unrealized rent you received, you can claim standard deduction of 30% and balance 70% of this will become taxable. Understood? Because this has not been taxed in the earlier years. When it received, it will become taxable. You can claim standard deductions. Whatever the amount you have received as rent, which was deducted while calculating the actual rent received as unrealized rent. Understood, guys?
Sir, could you please repeat that, sir?
When there is an unrealized rent means the tenant from whom you should have received the amount, but you didn't receive, and you have made him to vacate your property, or you have taken the steps to vacate your property. Later years, if you happens to receive the rent which you couldn't have received during the period of tenancy, in that case, whatever the rent received minus 30% of the standard deduction you can claim, and only the balance 70% becomes taxable. Understood?
Yes, sir.
Okay. There ends the theory part of house property. Okay. Any doubt in this? Whatever we have discussed so far? If nothing is there, shall we go to problems? Question number 1. Find out the expected rent. How to find out the expected rent? This one. How to find out this one? How to find out this? Any 5 can try 5 houses. House 1, 2, 3, 4, 5. Any 5 of you can try. What would be the answer? Have you guys noted down these things or not?
Yes, sir.
Even I solved these 2 problems, no? Okay. Municipal valuation or fair rent, whichever is higher. That is the one part. That will be compared with standard rent. Whichever is less, that will be your
Expected rent.
expected rent. Second one.
14,000 is the expected.
12,000 and 16,000. Whichever is higher, 16,000 comes. 16,000 and 14,000. 14,000 is the answer. In this case,
16.
there is no standard rent. In this case,
8,000.
in this case,
17,000. 17, sir.
easy. Okay. In this case, house A, 90 becomes the higher one. Standard rent is not available means
90.
there is no standard rent. Okay, 90,000 will be compared with 72,000. Whichever is higher will be taken as annual value 90. Okay, like that, can you guys compare? Can you let me know the answer for these four houses? House B, House B, what is the gross annual value? What's the value for house B, C, D, E? You will get the question like this only, but the other part will also be included. Before proceeding to the bigger ones, I wanted to ensure that you guys have understood how to arrive at the gross annual value. Bhuvaneshwari, Pooja, Vidyashree, Malini,
Sir, for house B, it's 72,000.
72. How 55 and 60 will be compared? Whichever is higher, 60. That
Yes.
will be compared with 75,000. Whichever is low, that will be taken as expected rent. 60,000. 60,000 will be compared with 72,000. Whichever is higher, that will be annual value. 72,000 will be gross annual value. You guys are getting now how to calculate?
Yes, sir.
Okay. Like that, you need to calculate. This one, problem number 3. This one, find out net annual value. Refer problem number 2 and apply these things. This is for the problem number 3. Whatever the annual value you get, from that you need to deduct municipal taxes. Tell me which municipal taxes has to be deducted. Is it both or any one? If one, which one?
Is allowed, deductible.
Who is this?
Kusuma, sir.
Municipal taxes paid by tenant should not be allowed. Municipal taxes paid by owner is only allowed. Okay, paid by owner is allowed. Your property, you have to pay municipal tax. If I am the tenant, if I pay municipal taxes on your behalf, you will not get the deduction. Why? Double deduction will happen. No benefit. First, you will not pay your municipal tax. If I pay, if you take the deduction, that becomes double deduction kind of a thing. No, hence it is not allowed. Only municipal tax paid by owner should be allowed. this case, for any one house, please tell me what is the net annual value.
In a little more on what is net annual value. I've joined
Net
today
annual
on
value is nothing but gross annual value minus municipal taxes paid by owner. Gross annual value is nothing but of this you arrive at the gross annual value, no?
Yes,
With
sir.
this information,
Gross
that is
annual value I have understood.
Okay, minus municipal taxes paid by owner
Okay, sir.
is the net annual value. See, gross annual value less municipal tax paid by owner, net annual value.
Okay.
So is it 16,560?
16,560, 12,000 and 14,000 we will compare. It becomes 14,000. 14,000 will be compared with 16,000. Whichever is less, 14,000 is the expected rent. That will be compared with actual rent. 18,000, 14,000, 18,000 becomes the higher one. 18,000 is the gross annual value. 18,000 minus 1,440. Don't take 360 because it is payable. Okay. 360 do not consider. 1,440. 16,560 it comes. Is that correct?
Yes, sir.
Okay. And one more thing, please make a note. If percentage of municipal tax is given, always you need to apply on the municipal value. If percentage is given, that will be applied on the municipal value.
Could you please give an example?
Assume that municipal taxes 10%, like that they give.
So is it the one in problem 4 what's showing that?
No. No. Problem 4 is whatever the 1,440 is there, no? If of this 50% is paid by tenant, how much it will be allowed while calculating the net annual value? Continuation of this. Paid by owner is there, no? Just municipal taxes paid, 1,440. In adjustment they give 50% of the municipal taxes paid by tenant. How much you will consider, entire 1,440 or 50% only?
50%.
50% paid by tenant should be ignored. 50% paid by owner should be considered. Understood?
Yes, sir.
Yes, sir.
But if assume that if you guys observe, it will be 10% of actual rent received, it will be the municipal taxes I have taken. But it's not the right way. But to get the amount, I just took in that way. If at all municipal taxes is given as a percentage, assume that municipal taxes, house number 1 10%, house number 2 8%, 12%, 10%, 10%. You need to apply that percentage on the municipal valuation. Municipal taxes percentage is given. Need to apply on the municipal valuation. Understood? You guys are getting?
Yes, sir.
See, this one. Can you guys calculate? Write it down. First, please start solving the problem. From now onwards, we will start the problem. Please write down. Problems on house property. Mr. Pandey, is it visible clearly?
Yes.
No? Okay. Mr. Pandey, owner of 3 houses in Chennai, furnished the following information. Compute his income from house property for the assessment year 23-24. Our assessment year is 23-24. Okay. Particulars: house number 1, house number 2, house number 3. Type of occupancy. First one is the let out. Second one self-occupied. Third one self-occupied. Assume instead of this let out, had they given this is also self-occupied, what would have been your answer? Had it been self-occupied also instead of let out, what would have been your answer?
Annual value is 0, sir.
For how many houses?
All the self-occupied houses, sir.
Up to 2 houses, sir.
Two SOPs exempt. Then balance house, what it will be called as? It will be taxable as deemed to be let out.
Yes.
You need to calculate for all the 3 houses. If they have given all the 3 are self-occupied, you need to calculate on the assumption that all 3 are let out first. If all 3 houses given as self-occupied, you need to calculate the income from house property on the presumption that all 3 are let out. Based on the net result, you have to make a call which 2 should be treated as SOP and which one to be treated as DLOP. Are you guys understanding my point? If all 3 houses are given as self-occupied, we need to solve the problem on the presumption that all 3 are let out. Once we get the final answer, based on that, we need to take a call which 2 houses to be treated as SOPs. The other one will be treated as DLOP. That value will be, that income from house property will be taken for calculation of tax purpose. I think it may come. Okay. Now we will not go too far to apply our mind. Once it comes, we will see. Now, coming back to this problem, types of occupancy: let out, self-occupied, self-occupied. Standard rent is given 1,50,000, 15 lakhs, 18 lakhs. Municipal value 2 lakhs, 13 lakhs, 13 lakh 50. Fair rent 2 lakh 50, 16 lakhs, 19 lakhs. municipal tax, 10% of the municipal value on this you need to apply. Even if they do not give municipal value here, you need to apply on municipal value only. Interest on loan taken for purchase of houses, 90,000, 1,70,000, 1,65,000. For self-occupied property, how much maximum interest is allowed?
2 lakhs.
2 lakhs. In this case, there are two self-occupied properties. We have to be very careful how much to be treated in each or with respect to total. Since these two are self-occupied, there is no rent received. Only rent received will come in case of let out. Understood? Shall we start solving the problem? Okay. Write the heading. Computation of income from house property. Computation of income from house property. Have 4 columns like this. Particulars, house 1, house 2, house 3. Next line, type of tenancy, LOP, SOP, SOP, please write. Once you done that one, please let me know. We will solve the problem. This is the problem, right?
Yes.
Solution. Particulars, house 1, house 2, house 3. In the next line, types of tenancy, LOP, SOP and SOP. Okay. First one, you need to compare A, B. Municipal value, only for LOP you take 2 lakhs. Fair rent, 2,50,000. Why I will not write those things in SOP? Because annual value for SOP should be taken as nil. Next, C, A or B, whichever is high. In these two, which is the higher one?
2,50,000.
2,50,000. Okay. D. Standard rent. Standard rent D. E. Expected rent. C or D, whichever is lower. Are you guys getting?
Yes, sir.
Expected rent C or D. C or D, whichever is lower. Which is the one?
1,50,000.
1,50,000. Next, F. Actual rent received. While doing the calculation of this, you should be very careful. Actual rent received is nothing but whatever the actual rent you received plus rent receivable minus unrealized rent. Okay. Actual rent received, how much it is given? 25,000 per month multiplied by 12 comes to 3 lakhs. Gross annual value. How to get gross annual value?
Whichever is higher, sir. Actual rent. Expected rent.
Whichever is higher. Is it okay? Correct?
Yes, sir.
Next, municipal taxes. 10% of municipal value. What is the municipal value here?
2 lakh.
Into 10%. How much it comes? 20,000. This minus this becomes your net annual value. Understanding?
Yes, sir. Yes, sir.
From this less standard deduction at 30% of net annual value, flat of this 30%. 84,000. The other deduction will get interest on loan. How much you get in case of let out? Entire 90,000. Now you have to pause for a minute here. 90,000 you will get for let out. Whereas in case of self-occupied, these two are self-occupied, no?
Yes, sir.
These two are self-occupied. Interest on loan for these two shall be restricted to 2 lakhs. Either you can take 1,70,000 to this, balance 30,000. Are you guys getting?
So not on one SOP, the maximum deduction is
No.
2.
No.
Okay.
If that be the case, if you have 10 SOPs, 10 into 2 lakhs, 20 lakhs, you will get the deduction. You receive the rent of 18 lakhs. 2 lakhs or 19 lakhs, assume that 1 lakh again you will carry forward the loss. Loss to the government, no income. Okay, you can either take this one, 1,70,000, balance 30,000 to this, or you can take 1,60,000 to this, 35,000 to this. You can do anyway. Are you guys able to catch?
Yes, sir.
Okay. Balance this minus this minus this. You got it? This is income from house property. Any doubt in this? Any doubt till here?
So can you explain that after that interest on loan?
Which one? This one?
Yes, sir. The 35,000 and 1 lakh.
35,000. The interest on loan for one second. Interest on loan for house number 2, 1,70,000. 1,65,000 is for house number 3. Okay. But in case of SOP, self-occupied, maximum interest allowed is 2 lakhs. Getting?
Yes,
For
sir.
LOP, DLOP, no limit. Hence, either you can take this one as 170, 30 this. Or you have, in this case, we have considered entire 165 for third house and balance 35,000 for house number 2. Total should not exceed 2 lakhs.
Okay, sir.
Okay. See, this much is the problem. But there is one more step. The loss with respect to house property, can be set off against income from any source. What I told? Loss from house property can be set off against income from any other source. The maximum set off can happen with respect to house property, with respect to other heads of income. Other heads means there are 5 heads: salary, profits and gains of business or profession, capital gain and other source. If you want to set off the loss of this house property, the maximum loss can be set off against these four heads, any of these four heads, or cumulative in aggregate of these four heads will be restricted to 2 lakhs. How much? Because there is a chapter called as set off and carry forward. Please write down. Set off of losses from house property against any other head of income will be restricted to 2 lakhs. What is the catching point here? Other head. Are you guys getting?
So can you scroll up a little bit? So I want to see the first part of the calculation.
Sorry?
The first part of the calculation, so
This one?
yes, sir. Yes, sir.
Have you guys understood this part?
Yes, sir.
Malini or Ghana, please help me. What could be the other side of the coin?
Sir, as in?
I made a statement this. This is the provision. I made this. What could be the other side? See, set off of losses from house property against any other head. Any other head means excluding house property will be restricted to 2 lakhs.
So under the head of salary,
No. Other head. Okay. Against house property. Now I want to ask how much you can set off against the Loss from house property against house property. In this case, there is a loss, right? There is an income. Against any other head, it will be restricted to 2 lakhs. Within the head, there is no limit. No limit within the head. Sir, how it is possible? The question may come, right? Assume for a moment. This is also LOP. Assume for a moment. This is also a let out. You get 2,50,000 as interest. Okay. Assume this is also let out. All three are let out. Okay. Only for my understanding purpose, this comes to 12 lakhs. Now my house property from first let out property comes to 7,50,000. My loss from house property comes to how, sir, it can be. Okay, just give me 2 minutes. 25,000 is my net annual value. Here I will get 40,000 as net annual value. I am just speculating. Okay, 30% of this comes to 12,000. My interest on loan comes to 2,50,000, 1,65,000. Then there is a loss, right? My net annual value is 25,000, 40,000 with respect to these two let out properties. After having done all these calculations, it may come like this. I will take standard deduction of 7,530%, 12,000 of net annual value. I will take the deduction. There is a interest on loan to the extent of 2,60,000, 1,65,000. Let out property. Let out property deemed to be let out property. Interest on loan, no limit. Are you guys able to understand? Okay. Now, can I set off these two laws from house property becomes the question. The answer is house property laws can be set off against any head, any source, any head. But if it is from other head, it will be restricted to 2 lakhs. Other head means other than house property head. It will be restricted to 2 lakhs. If within the same head, there is no limit to set off. Okay, in this case, my net income from house property, will be 3,80,500 after setting off these two laws. 7,50,000 is my income from house property, from house number 1. Loss from house property, house number 2. Loss from house property, house number 3. Net income from house property will be 3,80,500. Understanding? Yes. Got it? Please remember this one, because there is a chapter called of set off and carry forward. There I will ask How much can be set off against any other head? How much can be set off against the same source, same head? You have to recall this. Got it? Now tell me, how much my net income from house property from this source, from this information?
Sir, it's negative, sir, negative.
94,000. You can carry forward this loss to next assessment year. I will tell you how many assessment years you can carry forward. Up to 8 assessment years you can carry forward the losses. This loss, next 8 years. Next year loss, next 8 years. Like that. You can carry forward up to 8 assessment years. Understood?
Yes, sir.
Income includes loss. Always remember, income includes loss. Income doesn't mean that positive. Income includes loss. Or you can say loss from house property. Both one and the same. Loss from house property. Carry forward to next assessment year.
Yes, sir.
Okay. Shall I go to next problem? Any confusion, any doubt? Any doubt, any confusion to anyone?
No, sir, understood.
Understood?